Thanks, Craig, for the intro. Hi, everybody. Thanks for tuning in the midst of the deep summer here. I'm Blair Wiley. I'm the general counsel at Wealthsimple. I've been at Wealthsimple for just over a year and a half now. And before that, I was a partner at Osler, Hoskin and Harcourt, where I led Osler's blockchain and fintech practices. So this is a space that, for me, has sort of had a lot of focus over multiple years for me as I kind of have worked on helping clients and regulators, and now Wealthsimple figure out the regulatory path forward for cryptocurrency trading in Canada. And just last week, we announced some pretty exciting news that Wealthsimple Crypto had received a regulatory approval from every securities regulator across Canada to offer a crypto trading platform for Bitcoin and Ethereum to every Canadian who's of age and lives in the country. It's a pretty awesome feat for us. We're really excited to have been part of this kind of groundbreaking achievement. And my hope for the next kind of 14 minutes or so is to share with you a bit about why we did this, why we're in the crypto space, what our business model looks like, what it was like for us working with regulators. And I think maybe what might be most useful for this audience is some of the lessons that we learned along the way in terms of what to do and what not to do in this novel area that I hope will be useful for others who approach regulators with novel business ideas in the future. So I imagine most people are familiar with Wealthsimple. We started out just over 5 years ago as a robo-advisor, managing passive portfolios of ETFs for clients on a really low fee basis with a really simple to use online interface. Just about a year and a half ago, we launched a self-directed trading product called Wealthsimple Trade. And that has enabled clients to buy and sell their own securities on a commission-free basis, much like a Robinhood business model in the U.S. We also offer a high-interest savings product, and announced earlier in the year that we are going to be adding spending features to that product so that people can use us as a spending platform as well. So we were a robo-advisor, and we do that in multiple countries, in the U.S. and the UK as well, but we've been expanding rapidly in the last 2 years, in particular, into new product areas. And we've now seen that Wealthsimple Trade, our self-directed trading platform, is actually bigger in terms of absolute number of clients than our traditional robo-advisor platform. So we're definitely diversified as a company compared to not that long ago. When it comes to crypto, we started looking at this a long time ago, and I think we were driven by a couple really core motivating factors. First and foremost, our client demographic trends younger. It's a lot of our clients are under the age of 40, and it lines up demographically with the same folks who are buying and selling crypto assets. These are not kind of grandmothers and grandfathers who don't know what Bitcoin is. Our clients are already in this space, and we wanted to be the platform that served them in this space. We also just think cryptocurrency and blockchain technology are incredibly exciting, and we want to invest in technologies that we think are going to be part of the future of money, the future of how people receive financial services and make payments for goods, and how governments potentially manage their own fiat-backed and government currencies. So having a place in this space was really important to us as we invest in technology and look to be a key player for the future of all financial services, which we think cryptocurrency is a big part of. And then lastly, why we did this. I think we've seen a lot of major failures. We've seen, the Quadriga, of course, as a international embarrassment that such a fraud of epic proportions took place in Canada. More recently, we've had examples of CoinSquare faking 90% of their trading volume. There's unfortunately just not been a great history of, digital asset trading platforms operating in accordance with the law in Canada. And I think one of the things that's bothered me is that I know so many strong entrepreneurs and technologists who are doing great things in blockchain and cryptocurrency. And you just constantly get kind of lumped into this camp of, oh, isn't like Bitcoin, isn't like what Kadriga did and the fraud and pyramid schemes. And if we can help create space for legitimate crypto asset businesses to flourish with regulators, with banking partners that are still very skeptical, then that's something that I will personally feel really excited about. So being a legitimate player in the space that hopefully will open more doors for all of us is something that we care a lot about. And look, we're really fortunate that we have strong backers, strong investors that have really believed in us to plant a flag in the ground in this crypto asset space. So how did we do it? I mean, I think first and foremost, we didn't try and build Rome in a day. We just instead said, let's look at trusted third parties. Let's look at people who are already doing things really well, and work with them so that we don't try and do something massive and new from scratch. So we worked with Gemini for custodial services, and we have multiple Canadian liquidity providers who we use to buy and sell Bitcoin and Ether for clients, and who then transfer crypto bought or sold to Gemini in an on-chain transaction that settles on a very regular cadence, so that client crypto is actually safely and securely held in cold storage at a regulated trust company, which is regulated like a bank is, and that has a strong record of regulatory compliance and good compliance systems and good financial oversight and controls. The other thing we did is we very deliberately avoided the landmine of trying to operate an exchange. We don't have a central limit order book. We don't think the Canadian market at this time is large enough to really support the sort of trading volumes necessary to enable price discovery, to enable people to get good prices for Bitcoin and Ethereum. And so we didn't try and build it. I mean, that's the CoinSquare model that they went down, and they themselves, with I think the reports from the OSC suggested they had well north of 200,000 clients, and yet they couldn't sustain enough natural trading volume to actually run an exchange. And so for us, not going down that path, and instead going down the path of being a broker made a lot of sense. The last thing we did on the how is that we built what's, I guess kind of commonly referred to as a closed loop system as our starting point, which means that we don't yet currently have a model for clients to transfer their own crypto onto their Wealthsimple account, or transfer crypto that they purchase with us off of or outside of their Wealthsimple account. And that was done really to try and simplify concerns raised by our banking partners around AML and fraud. But I think all I would say on that is there is a mechanism, and it will be possible for clients to transfer crypto that they've purchased off of our platform to their own wallet or to another exchange or destination of their choice, subject to AML checks and the like. And we do think that our platform will necessarily evolve and grow and add new functionality and features in time. It's just kind of consistent with our overall model for building software, which is to start with an MVP and then iterate. And for us, starting with a closed loop model made the most sense. And we'll see how business goes, and we'll grow from that. I want to spend a few minutes talking about working with regulators. It's obviously in the crypto community, working with regulators is kind of, I don't know, not always something that people get too excited about. We think it's really important. This has been a tricky space. We've read all the guidance. It's hard, frankly, to still totally see where securities laws apply to a crypto trading platform when no one thinks that Bitcoin or Ether is a security. How do you sort of get your mind around regulating us as a dealer in cryptocurrency when the cryptocurrency itself is not a security? In our view, and I think the view that we landed on and found common ground with regulators on, is that regulators do have a role to play for any business that is entrusted to hold assets for the retail public. There should be regulation. There's a reason why banks and trust companies and securities dealers have been regulated for a long, long time, at least since the 1930s, because they are holding millions, billions of dollars of retail client assets, and there should be systems in place for capital adequacy, financial controls, and audited financial statements, having compliance systems, having insurance, having regulatory oversight to make sure that all those books and records check out for clients. And we think that it does make sense, and we're very supportive of regulators looking after any crypto trading platform which is actually taking responsibility for custodying client assets, which we do. It's our job to work with Gemini as the custodian that actually holds the crypto for clients in cold storage, but we still face clients and promise to them that we will keep their crypto that they've purchased from us safe, and that we will be there to sell it for them when they decide they want to liquidate their investment at some future date. There's still a lot of work to do with regulators. We give them a lot of credit for giving us the regulatory approval to get operational, to begin offering our product in the Canadian market. We think that there's so many significant developments that our platform brings about. Everything from much better on-ramps through funding that is on a no-fee basis, through traditional bank EFT funding, to reporting, to how we supervise trading activity to make sure that clients are not harming themselves. And so regulators were eager to get us our beta approval. And so we're now inviting people off the wait list, and really excited to see and receive feedback early on as we build and mature our product. I want to kind of leave with maybe 3 lessons learned that I think might be helpful takeaways for others who are looking either at a crypto asset trading platform or some other novel product area that does not fit within the existing regulatory guidance. The first thing I would say is, where possible, it really helps to speak the language of regulators. So if you need external counsel, to help you do that, that's something that might be a worthwhile investment for you. Just like a traditional bricks and mortar business makes a big investment in like leasehold improvements for their space. Your investment might be legal or accounting advice to be able to speak the language of regulators. And most importantly, when you get that advice, or if you have an expert on your team, try very hard to structure your product around it being a kind of a natural extension from what exists today. And regulators have models that they've developed and refined and tested over decades, if not longer. So if you can kind of fit within like the core tenets of that model, it helps a great deal. So, in our system, we were able to say, look, we're not that different from a securities dealer that buys and sells securities, because we use an executing broker, a third-party dealer that's responsible for getting us good prices. And client property is custodied at a trusted third-party custodian that we don't own or control. And that's very similar to an IROC dealer that trades securities that keeps securities custodied at CDS, for example, where there's a book entry and everything is held with that third party, which gives regulators a lot of comfort that the firm that's actually doing the buying and selling, the dealer, has other checks and balances built into their system. So I would really encourage everyone who's looking at novel products to look at the way the current system works, and to the extent that there are parallels and synergies to the way that securities trading works today, for example, or financial payments are delivered today. It's a good starting place, at least, to engage in the conversation, so you can help regulators understand what's actually different, what's actually new, and what needs to be regulated in a different way. Helps narrow the universe of issues substantially. My second sort of tip is, come to regulators with a fully built product, or as close to product ready as you can. If you come to them with an idea, a concept, oftentimes you're going to be asked a million questions about, what about this? What about that? What about this? Going to them saying, we've done our homework, we're prepared, we have something that's thoughtful, that's comprehensive in its plans, makes a big difference, I think, in terms of how a regulator will engage, because they'll actually have some real material to chew on rather than more questions than answers. Come to them with answers. And then the last lesson, I think, is I do think that this is a good time for novel areas like blockchain and cryptocurrency to re-engage with regulators. There was a big flurry back a few years ago. The markets cooled off. Now go back, try again. Quadriga was a disaster. CoinSquare is also not, I think, from my perspective, a great story right now in the Canadian crypto space. So if you have really thoughtful ideas and products that you'd like to move forward and deliver, and you embrace this concept of trying to fit, at least where possible, within a framework that makes sense for existing regulation, and you try really hard to come with a product that's already answering all the questions that a regulator will ask, I think there's a real opportunity right now in the Canadian capital markets. So that's all I've got. I think I'm over time. Craig, back to you. But it was a pleasure being here today.